The markets have gotten overvalued in spots, making finding undervalued autonomous driving stocks a little more challenging. Here's a look at 3 undervalued autonomous driving stocks. Alphabet. Waymo is hitting the streets, which means an additional future revenue stream. Baidu. The company has its hands in a lot of pies. Qualcomm. Its newest SOAK products will lead to additional automotive business. Let's dive in. Here are the 3 most undervalued autonomous driving stocks to buy now, August 2023. Welcome to Timely Investment Research. It's been a while since I've talked about self-driving car stocks. The last time was in April 2022, when I suggested Waymo could bring Alphabet a new revenue stream. Perhaps Google's parent is undervalued. It's also been a long time since I've recorded about Alphabet stock. To get some ideas, I perused the Global X Autonomous and Electric Vehicles ATF list of holdings. It invests in 75 companies that are involved in the development of autonomous vehicle technology, electric vehicles, EVs, and EV components and materials, states the ETF's homepage. Alphabet is in the top position, accounting for 3.45% of the fund's portfolio. I'm spying on at least one other name in the top 10 and at least one outside them. Here are my 3 undervalued autonomous driving stocks to buy now. Number 1. Alphabet. You could argue that Alphabet stock isn't undervalued, given it's up 45% year-to-date and 112% over the past 5 years. However, that would lose sight of the fact that one of the company's biggest future revenue generators has yet to deliver for shareholders. When I wrote about Waymo a year ago in April, it had just announced that its fully autonomous driving experiment in San Francisco would take the next major step to commercial development. Fast forward more than a year. On August 10th, the California Public Utilities Commission issued approvals for Waymo and Cruise, the General Motors driverless robotaxi service testing in San Francisco, to operate around the clock instead of just overnight. Today, Waymo received its driverless deployment permit from the California Public Utilities Commission, the final step in a robust process with regulators before we could offer a paid fully autonomous ride-hailing service in San Francisco, stated the company's August 10th press release. In the coming weeks, we'll begin charging fares for rider-only trips in the city and gradually welcoming more riders into the service. According to the press release, it has over 100,000 people signed up on its waiting list. If you're an Alphabet shareholder, this is the beginning of another cash machine for the company. Trading at 5.78x sales, Alphabet stock's valuation is less than its 5-year average. With Waymo ready to contribute to Alphabet's top line, you can't put a price on this news. Number 2. Baidu. Baidu is not in Global X Autonomous and Electric Vehicles ET's top 10. However, it is in the top 20. The Chinese tech company has its hands in a lot of pies. For example, it has its own ChatGPT alternative called ErnieBot. In late June, it suggested that its generative artificial intelligence chatbot outperformed OpenAI's in several key areas. Citing the China Science Daily Journal, Baidu said Ernie 3.5 surpassed ChatGPT in a number of benchmark tests. ChatGPT is based on OpenAI's GPT 3.5 model, CNBC reported in June. Ernie 3.5 also beat GPT-4, OpenAI's latest and more advanced model, in Chinese language tests, according to the Science Journal. What's that got to do with autonomous driving? Well, in November 2022, at Apollo Day, the company's autonomous driving tech event, it announced that it had developed the first AI big model for autonomous driving, enabling it to recognize objects it hasn't seen before. Backed by its solid AI technology, Baidu Apollo has created a safe, intelligent, and efficient autonomous driving technology system, bringing robotaxi services from designated zones to open roads at scale, said Jingke Chen, Baidu's autonomous driving technology expert at the event. In June, the company said it had obtained a commercial license from regulators to operate its driverless ride-hailing service in parts of Shenzhen. It can operate its Apollo Go driverless robotaxis fleet in an area of 117 square miles. It plans to have more than 200 on Chinese roads this summer. In the trailing 12 months ended first quarter 2023, its free cash flow was 21.8 billion Chinese yuan, $2.98 billion. Based on an enterprise value of $35.9 billion, it has a free cash flow yield of 8.3%. I consider anything 8% or higher to be in value territory. It's a buy. Number 3. Qualcomm. Qualcomm is also in Global X Autonomous and Electric Vehicles its top 10 in the 8th spot. On January 5, 2020, the chipmaker launched its Snapdragon Ride platform at the 2020 Consumer Electronics Show. Snapdragon Ride aims to address the complexity of autonomous driving and advanced driver assistance systems by leveraging its high-performance, power-efficient hardware, industry-leading AI technologies, and pioneering autonomous driving stack to deliver a comprehensive, cost and energy-efficient system solution, stated its press release. Fast forward to Consumer Electronics Show 2023. Qualcomm introduced a few more products targeting the autonomous driving industry. The most significant is the Snapdragon Ride Flex system on a chip, specifically designed to support digital dashboards and advanced driver assistance systems. According to Forbes tech contributor Patrick Moorhead, the all-in-one design could generate more business from its automotive partners. Moorhead's best argument about these chips is that they provide real competition for NVIDIA in the area of fully integrated over-the-air solutions for future vehicles. Competition begets innovation. What's not to like? As for analysts, they're moderately optimistic about Qualcomm stock. Of the 32 that cover it, 21 rate it as overweight or an outright buy, while 10 have it as a hold and just one sell. The median target price of $140 suggests it's got nearly 30% upside over the next 12 months. It trades at just 13.2x the current year's earnings estimate of $8.34 a share. That compares to 53.8x for NVIDIA. It's not hard to determine which stock currently has the better risk-reward proposition. Go ahead and add Qualcomm to your list of undervalued autonomous driving stocks worth buying now. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.